Welcome to Mr. Zero to Infinity for episode 39. We had an ignition of new subscribers from the last two episodes covering VTIQ stock, and the channel just broke 1,000 subscribers. Mr. Zero to Infinity loves adding zeros, so he'll be monitoring that subscriber counter and that like counter too. Our most liked video was 219 likes. Interested to see when we beat that number. For this episode, let's pull up the stock portfolio that I've been documenting from zero since the beginning of the year. You'll notice I have 4 stocks. I have yet to sell any stocks in the portfolio at the time of this recording. I'm a part owner of Fiverr International, FVRR stock, a company that connects businesses with freelancers. Apple, AAPL stock, a company that sells iPhones, and a lot of other products and services. Starbucks, SBUX stock, a company that sells coffee. And last but not least, Penn National Gaming, PENN stock, a company that operates casinos, racetracks, and also acquired a percentage of Barstool Sports brand. And that leads me to the stock that's on my research board, DraftKings, or DKNG stock, which is a sports betting company. If you've been following along my episode series, you already know I have a bull thesis on the growing sports betting industry, which is why I started to build a stock position in Penn National Gaming, which is in the process of working on a sportsbook app to compete against the bigger players like DraftKings and Fan Duel. My main bull thesis on Penn stock is that it has an infrastructure of casinos, racetracks, and hotels to market the Barstool Sports brand to all the people that walk on their properties. It's logical to think that Dave Portnoy and his team of influencers will promote the sportsbook app, which is a huge advantage over DraftKings in my opinion, since DraftKings will have to set aside a substantial marketing budget, which limits their profit margins. DraftKings finally released their first quarter earnings, so I wanted to do a quick DraftKings stock analysis based on my personal opinions and perspective. Before I get into my thoughts, remember, I'm not a financial advisor and this is not investment advice. Always do your own research. This video is for entertainment purposes only. Don't copy my stock portfolio picks, since I have different goals from you with a different time horizon for all of my investments. So let's begin. Let's draw a line. On the left side, I'll discuss what I like about DraftKings, and on the right side, I'll discuss what I don't like. So bull case on the left, bear case on the right. Keep in mind, these will only hit a few points since I'm still doing research and I still need more time to review the earnings call fully. And we're off. In my opinion, DraftKings is currently the fantasy sports leader along with Fan Duel. I like leaders with a proven product. This idea is very similar to Tesla, as new competitors are trying to catch up like Nikola, Rivian, Neo, and the list goes on. As an investor, I like to be a part owner of growth stocks that have the potential to be best of breed stocks in their industry. Think Tesla in the EV market. Think Amazon and what they did to Toys R Us and Barnes & Noble. Think Netflix and what they did to Blockbuster. They are all companies that continue to dominate their industry as time went on. This leads me to what I don't like. Competition is entering the space. You have plenty of casino stocks working on their own online sportsbook apps to compete with DraftKings. Penn National Gaming and their Barstool Sportsbook has been on my radar since Penn National Gaming acquired a 36% stake in the media company known as Barstool Sports. You may think Barstool is just for college kids, but the loyal fan base continues to grow in numbers, especially with Dave Portnoy as the leader, who constantly works around the cancellation of sports on TV. Davey Day Trader Global has entered the day trading game to entertain his audience. Keep in mind, Dave Portnoy is just one influencer under the Barstool umbrella, which includes blogs, podcasts, shows, videos, the list goes on. Each influencer has a small niche audience ready to be marketed to when the Barstool Sportsbook app is launched live, ready to be promoted. And that leads me to an item I like about DraftKings. Their loyal customers continue to grow in numbers as well. Plus, they are innovating with the lack of major sports on TV by offering new products to bet on. Fantasy sports and betting on eNascar, CounterStrike, a game I used to play as a kid, and Rocket League. Even fantasy Call of Duty was a new item. I'm not exactly how that works, but I'll have to do some more research. I can only imagine the opportunity of betting on kids playing a video game. That would be comparable to watching two of your friends playing Mario Kart and then betting one of your friends who's going to win the race as you watch on with the cocktail of your choice. Interesting concept. Now, how would that be regulated for cheaters? Just some thoughts. DraftKings also added pop culture pool contests that cover TV shows like Survivor and The Top Chef. I like companies that continue to innovate. Keep innovating or get disrupted. Another thing I like about the entire sports betting industry is that more and more states are legalizing sports gambling. I personally think this momentum will continue slowly and steadily over time because states will need another source to bring in more tax revenue in a potential struggling economy if these recession talks are legitimate. The after effects from all these shutdowns and closures is still to be determined. Lots of people like to speculate. All I do is try to figure out ways to invest my money in a moving stock market. There are always ups and downs along the journey from zero to infinity. And that leads me to my next point, the downs. If the economy continues to weaken, how will that affect the sports betting industry as a whole? I think it's a reasonable conclusion to think the amount wagered on sports will go down if more and more people are losing jobs and have less capital to throw at an entertaining thrill which is called sports betting and gambling. Just as a quick mention, have you noticed the trend that's going on right now? Now that these $0 trading fees are the new norm when it comes to investing in the stock market? Reddit forums, stock twits, and even comments sections here on YouTube continue to grow with comments with these government lockdowns. Rather than investing, I should say trading. Very similar to sports gambling. I think there will always be a market for people that want a quick adrenaline rush of placing a bet on a sports game or a stock ticker on their Robinhood, Webull, or Cash App account. Sometimes logic goes out the window when it comes to betting. A lot of traders and gamblers will lose a lot of money and some will be over leveraged or on margin, which is trading on money they don't even have. Watch out for those margin calls, everybody. Be careful. If you've been following along my unique journey, you already know one of my main investing principles is I never invest money I need tomorrow. I know that at any time my investments can indeed go down, even to zero at any time. Do I try to position my money in stocks that I think will go up in the other direction? Of course, but I don't have a DeLorean time machine or a crystal ball to only select the winners. No one's perfect, and limiting the amount of losing stocks in my portfolio is always my long-term goal. Back to DraftKings, something that I am still researching is today's valuation compared to the future valuation. Remember, I'm always trying to find stocks that are undervalued today and will grow in value over long periods of time. If a stock pick exceeds my expectations sooner than expected, then I will take profits. If it drops unexpectedly and my bull thesis changes, then I will have to cut my losses. So, in regards to DraftKings valuation, the market cap on my iPhone is around $9 billion for a company that reported financial results based on DraftKings Q1 earnings presentation. I prefer reading the presentation directly from the investor relations page compared to reading articles with biased opinions. $450 million cash is nice to see. Monthly cash burn ranges from $15 to $20 million with no major sports. That's a downside risk. No one really knows when major sports will be back on, and there's a lot of uncertainty with the process of filling the seats with the whole social distancing and mask-related procedures depending on the area you live. Who knows how long the stay-at-home economy will continue. That's a reason why I like DraftKings. Rather than attend a live game when sports are back on and risk the chance of getting sick, why not just sit on the couch, open up your DraftKings app, and place a bet? That sounds entertaining to me, especially on a Friday night or weekend when I have some free time. Another thing I don't like is the fact that it's a new stock on the stock market. Their presentation explained DraftKings' successfully closed business combination on April 23rd, now publicly listed as DKNG, which is very similar to what VTIQ and Nikola is trying to do with their merger to NKLA stock. The new factor to the stock market goes on the right side. This can be another hype stock, so market volatility can swing up and down considerably for the first couple of months of trading. I have to do some more research if there's an IPO lockup period for a lot of shareholders that can potentially liquidate their shares when given the opportunity, especially since DraftKings avoided the standard IPO process for new companies that hit the stock market. If anyone has that information, then comment below. The presentation does say they have $450 million of cash on the balance sheet with no debt. I do like lean companies, meaning an app on your phone is a product that is made once and then constantly updated over time. Kind of like Facebook.com. Facebook was built for everyone to use, and then more and more people start to go on the site. When you have a product like DraftKings that was already developed, the main focus for any CEO and management team is to get more and more people to sign up on their app. Sure, there are costs associated with promoting the app, but once you get them in your ecosystem like an Apple brand, it's harder for them to leave since loyalty begins to develop over time. Just keep in mind, if there are issues with the platform, meaning crashes and privacy issues with collecting everybody's data, those are things to think about pretty much with any online website or app being used by the public. I could go on and on with good things and bad things, but let's limit this episode with just those thoughts for now. Since I still need time to research DraftKings fully, I'm in no rush to start allocating my stock portfolio's cash on a company I'm still looking into. If the stock price goes up, that's okay with me. If it does, I think Penn stock will follow the same path. If the stock price goes down, that's okay with me as well. I never rush into an investment without knowing the ins and outs, including researching the management team and their plans for the future. Since DraftKings is in an industry I like and understand as a sports fan, the big question I'll be trying to determine over these next few weeks and months and years is where this stock valuation will be in the next 5 or 10 plus years from today's date. How much future value is already being built at today's level? Since my research is extensive, I'd be glad to brainstorm ideas, and I'll try to answer any questions in the comment section below about the overall sports betting industry. As I do in every episode, here's a quick portfolio update without the green and red colors, which can be very distracting when looking at the percentage gain and loss. I'm not looking to outperform a certain metric like the S&P 500. I'm just a regular average retail investor looking to outperform my unique performance goals sooner rather than later and over a long period of time. Did I like it when Fiverr stock price was trading around $27 compared to levels exceeding $50? That's a logical question. Time will tell where Fiverr stock is trading in a year's time from now. The stock portfolio is still a very small amount in my opinion, and for that reason, any signs of a pullback in any of my holdings are welcomed in my opinion, since I can increase the amount of shares at lower stock prices. Hopefully the beginners and new investors are learning a little bit about the stock market as we progress with these episodes. I'll continue to add cash as the episodes move on. Remember, I'm in it for the long haul, always looking to get those big returns. The stock portfolio also received its first dividend payment from Apple. $4.10. I prioritize growth stocks in this portfolio, but if my stocks throw off dividend income each quarter, that's always a plus. Starbucks is another company that I'm a part owner of that pays a dividend. This $4.10 payment went straight to my cash position, along with some more cash that I added since last episode. Lots of stocks are on my research board. You'll have to tune in for future episodes to find out my next stock holding. Let's end it there. Play the music. As always, this episode is not intended as investment advice. Do your own research prior to making any investments and do your own fact checking. Read the disclaimer on your screen fully. Remember, all opinions in this episode are mine and mine alone. I'm not a financial advisor, and this video is for educational and informational purposes only. Maybe I didn't earn your subscription with this episode, but there's always next episode. It's free to subscribe, and a couple of my favorite comments from last episode are on your screen. Feel free to click on some of my earlier episodes. My email is in the description below for any questions you may want me to discuss in future episodes. Thanks again for watching. Let's keep building from zero to infinity. Mr. Zero to Infinity told me to tell you, you got this.